Good day, students, once again. Or perhaps it would be good if I can say shalom. I will be doing the topic in financial accounting called the bank reconciliation statement. And this is a very interesting and important topic to take into consideration. And before I begin proceeding with the procedure on how bank reconciliation statements should be done, I will be using the exercise that I have below in terms of introducing this chapter called bank reconciliation statement. So I have my exercise by the name of the books of Poole, and this exercise we are given here the bank reconciliation statement for the previous period. Then after we are given the cash receipt journal, and after we are given the cash payment journal, and the fourth point we are given the bank reconciliation statement. As I said that I will be using this exercise to explain what bank reconciliation statement is all about. Then after I will do the exercise after I have given you the procedure. So now in the bank reconciliation statement topic, we are normally comparing the cash receipt journal. And remember that cash receipt journal, which is sometimes abbreviated as CRJ, that is where we record all the cash that has been received from the customer or from the client through the sale of goods and services. So whenever cash is received, we record that in the cash receipt journal. Then in the cash payment journal, which is normally abbreviated as CPJ, we record all the cash that go out of the business, meaning whenever we make the payment, either a payment in the form of rent, or a payment in the form of salaries and wages, or a payment in the form of paying our suppliers all the payments, or all the outflow of cash, either we purchase furniture or we buy stationery, all such amounts that go out of the business in cash will be recorded under the cash payment journal. Then now we know that after we have received money, going back to the cash receipt journal, the minute we receive money, we don't keep money in the premises of the business. We take that money, we transfer it into the bank account of the business. Therefore now that will be transferred and recorded in the bank account. And we also know that if we make a payment, we normally use what we call the EFT, where we take money out of the business. So now another account that is very important with regard to the bank reconciliation statement topic is the fact that we have what we call the bank account. And we know that a bank account is an asset. It increases on the debit side and it decreases on the credit side. And we know that whenever cash is received, meaning all the cash receipt journal items gets to be recorded on the debit side of the bank account, because our bank is an asset. It increases on the debit side whenever money is received. And we know that whenever money is going out, we record that as a decrease in the bank account. Therefore, now that means all the cash payment journal items will be mostly recorded on the credit side. So now this is the ledger account, which is the total combination of the cash receipt journal and the cash payment journal. They all get to be recorded in what we call the bank account, either on the debit side in the case of the cash receipt journal, or on the credit side in the case of the cash payment journal. And I'm not currently referring to the correction of error, where the reversal of the payment can be on the debit side or the reversal of the receipt can be on the credit side. I'm just referring to the receipt and the payment only, the first recognition of the receipt or the first recognition of the payment. So now after, as I said to you, that money has been recorded in the cash receipt, which is the cash book, and in the cash payment, it get to be recorded on the debit side and on the credit side. As I said to you that we don't keep money in the premises of the business. So now we have to take money and we deposit it with the bank that we bank with. So now it could be Absa, it could be Standard Bank, it could be Capitec, it could be Nedbank. So now when we receive money which we recorded on the debit side of the bank account and we give it to our bank that we bank with, the bank will record the receipt on the credit side of what we call the bank statement. And the question is, why now an increase in our cash book, which is our bank account on the debit side, is recorded on the credit side of the bank statement? Is because money that we receive and we give it to our bank or the bank that we bank with, remember, it is not their money, it is our money. So now we give them our money to keep it and save it for us in a very secured environment. So now they record money that they receive from us on the credit side of their bank statement because they are recognizing the money that they receive from us as a liability because they are owing us money that we give to them. So now meaning all the cash receipt journal items will normally be recorded on the credit side of the bank statement. And remember, I am not referring to the correction of error or an amount that was incorrectly recorded or was not supposed to be recorded. So now, if we receive money and we deposit it in the bank that we bank with, as I said, it could be Absa, it could be any other bank, it could be Capitec, it could be Nedbank. So when we give them money, they record that as a liability on their side, and we know that liabilities increase on the credit side. The reason why cash receipt journal items were recorded on the debit side because money that comes into the business is an asset to the business. But when we give that money to someone else, which is the bank that we bank with, then that becomes a liability on their side. So now, meaning all the cash payment journal items, which is the credit side of bank, when we pay salaries, we pay wages, we pay for the rent expense, or we pay for electricity, or we purchase furniture, or we purchase motor vehicle, or we purchase trading stock, that will be money going out of the bank account on the credit side, which is the cash payment journal, being the cash book of the business. So now whenever we buy something, the bank will recognize that as a debit. Remember, liabilities increase on the debit side. As I said to you, that whenever we deposit money in the bank that we bank with, that will be recognized as a liability increasing on the credit side. So now whenever we withdraw money because we are making a payment in the form of either paying wages, salary, or stationery, or rent, or furniture, or trading stock, therefore now that will be recorded on the debit side of the bank statement because the liabilities of the bank that we bank with, which is us, will be decreasing on the debit side because we are taking money out of our account and we instruct the bank to make a payment to the person that we want to pay for. So now this is the simplicity of, or just an overview or the introduction of what a bank reconciliation is all about. Then now I will explain the rest in terms of how the format of the bank reconciliation statement look like. Then this is honestly the basics of what is happening between the two. So now I will still continue doing the introduction. When I'm also doing the exercise, I will explain the rest of other stuff in terms of how we do the bank reconciliation statement. So now here is the very important procedure. It's not the steps, it's just the procedure that must be taken into account when we are in the process of doing the bank reconciliation statement. It says that we should compare the cash receipt journal. Remember, cash receipt journal is the debit side of the bank account. As I said, that on the debit side of the bank account, we record all the cash that was received, and we compare that with the credit column of the bank statement. As I said to you, that cash receipt journal items are compared with the credit side of the bank statement. So now this will be the cash receipt journal that will be compared with the credit side of the bank statement. So now meaning we will be comparing the cash receipt journal with the credit side of the bank statement because all the money that we receive becomes a liability to our bank Therefore, now liabilities increase on the credit side. So now that is why we compare the cash receipt journal or the debit side of the bank account. As I said to you that the bank account on the debit side, we record all the cash receipt journal items, and we record here all the cash payment journal, and this is a decrease of bank and this is an increase of the bank account. So now it says if amounts appear in both sides, we take it off. Then I don't want to stop there. I want to say we take it off and after we do nothing. And after we do nothing. That means the minute an amount appear both in the cash receipt journal and in the bank statement, it means we have to do nothing because the amount was correctly recorded. I just want to show you one random amount. In this case, if you look at our cash receipt journal, we have 110 rand 50 cents, and there is also 110 rand 50 cents that appears on the credit side. So now in this case, you tick this amount, then after you take it here, so it means we have recorded this in the cash receipt journal and we have recorded this, or it also appears in the bank statement. So now if it appears both sides and is the same amount, therefore it means it was accurately recorded by both parties, us as the business, meaning the cash receipt journal, and the bank that we bank with, which is the credit side of the bank statement. So now in that case, if the amount appear both sides, you mark it or you take it, then after you do nothing about that figure. So now let's go to the next part. Hence I added that you do nothing about that if the amount appear both sides. The next procedure says compare the cash payment journal. As I said to you that the cash payment journal is the credit side of the bank account. Is the credit side of the bank account. So now we compare the credit side of the bank account with the debit side of the bank statement. Remember, this is CPJ, this is CRJ. So now the second procedure say that we compare our cash payment journal, which is the credit side of the bank account, with the debit column of the bank statement. Remember, the debit column, this is the column. This is the debit column of the bank statement. However, the debit column of the bank statement can also be compared with the credit side of the bank account, because the bank account credit side, that is where we record all the cash payment journal items. Remember, we are not talking about the correction of error in this case. You'll see that later on. But I want to emphasize as I'm explaining now. And it says if amounts appears on both sides as the same, take it off and do nothing. Take it off, then after you do nothing if it appears both sides. Then after procedure number 3. And now let me again just give you a random figure in terms of comparing the cash payment journal and the debit side, any other random figure. Now on the cash payment journal, if you look there, we do have an amount of 70 rand. And we compare that with the debit column of the bank statement, and there is 70 rand. You tick that both sides, then after you do nothing, because this amount of 70 rand was recorded by us and also by the bank that we bank with. So with that, you do nothing after you ticked that amount. Number 3 says items in the cash receipt journal that has not been ticked off indicate that the cash receipt journal or the bank statement is incorrect or incomplete. And it says if the cash receipt journal is incorrect or incomplete, it must be corrected in the cash receipt journal or in the cash payment journal. So now after we have done the comparison, meaning after we have said 70 appears here, 4250 appears here, 86 appears here, and we have 115, but we don't see one, or there's also 115. Then there is 6225, 32 rand, we don't see 32 rand. So now after we have done the comparison and we realize that, and there's also 140 that is here, but we don't see 140 on the debit side. Then after we have done the comparison and still there are some outstanding amounts that have not been ticked off or that they don't appear both sides. Therefore now that means either the bank statement or the receipt or the cash book, which is the payment or the receipt, is incorrect. So now if that is the case, that they tell us that must be corrected in the cash receipt journal or in the cash payment journal. And I want to explain very importantly this part. The question is, how do we correct? Remember it said if the cash receipt journal is incorrect, it must be corrected in the cash receipt journal or in the cash payment journal. How do we correct a receipt in the payment? That's the question. So now let us go and review that. Remember, as I said to you, that on the debit side, we have all the cash receipt journal items. So now if we can say that there was an amount of receipt of 1,000 rand that was recorded, this is just a random figure out of my mind. If we recorded a cash receipt journal item of 1,000 rand, and we realize that this 1,000 rand was not the correct amount, assume that the correct amount was supposed to be, let us say, the correct amount was supposed to be 100 rand. So now in this case, that will mean that the debit side of the bank account is overstated. So now we need to reduce the debit side. And to reduce the debit side, we will have to record on the credit side an amount of 900 rands. Where now this will be a cash receipt journal, whatever the entry would have been. So now it will be 1,000 positive minus 900. So the difference will be on the debit side as 100 rand, which is the correct amount. So now in other words, we are reducing the 1,000 rand by 900 so that the remainder on the debit side becomes the 100 rand, which is the correct amount. So now in this case, if you look at this, you can see that we are correcting the cash receipt journal, but we are correcting it on the credit side of the bank account. And we know that the credit side of the bank account is the cash payment journal. So now that is why it says that we can correct our cash receipt journal in either in the cash receipt journal or in the cash payment journal. In the case where the debit side is overstated, therefore now we have to correct the debit side, which is the cash receipt journal, into the cash payment journal, being the credit side of the bank account. So that's why now they say you can correct the receipt in the receipt or the receipt in the payment. So now if let us say we recorded 1,000 rand on the debit side, but the correct amount, let us say the correct amount was supposed to be 10,000, but we recorded 1,000. So that means our debit side is underestimated or understated. So now that means we have to record now our cash receipt journal again by an amount of 9,000. Meaning if the side or if the cash book is understated, we correct it in the same cash book. Meaning if the receipt is underestimated, we record it, or we correct or we adjust the amount in the receipt. But if the receipt is overstated, we correct it or we adjust it in the cash payment journal, which is the credit side of the bank account. So that will apply the same principle when it comes to the cash payment journal. Meaning if the cash payment journal is overstated, it will be corrected in the cash receipt journal. And if the cash payment journal, which is the credit side, is underestimated, therefore now it will be corrected in the cash payment journal. Those are some of the principles that you might need to take into consideration. So now we have done the third procedure. The second step says if the bank statement is incorrect or incomplete, an entry must be made in the bank reconciliation statement. So now the minute the bank statement is incorrect, the correction of that should be done in the bank reconciliation statement. But if the receipt is incorrect or incomplete, we make the correction in the receipt or in the payment, meaning either on the debit side of the bank account or on the credit side of the bank account. Then after we go to procedure number 4. Procedure number 4 say that items in the cash payment journal that has not been taken off or ticked off indicate that the CPJ or the bank account, remember when they say cash payment journal or bank account, they are referring to this ledger account, because the bank account on the credit side is the cash payment journal. So now when they say CPJ, they are referring to the credit side of the bank account. And when they are saying CRJ, they are referring to the debit side of the bank account. That's why they say or, because the credit side of bank account is the cash payment journal. Or the bank says items in the CPJ that has not been ticked off indicate that CPJ or the bank statement is incorrect. So now CPJ, which is also the credit side of the bank account, might be incorrect or incomplete. And I want to always use this parallel that the CPJ is the credit side of the bank account. Then after now, if that is the case, they say if the CPJ is incorrect or incomplete, it must be corrected in the CPJ or in the cash receipt journal. As I said to you, that the same principle will apply if the credit side is underestimated. We correct it on the credit side. But if the credit side is overestimated, we correct it or we adjust it on the debit side. Similarly, with the case of 1,000 rand instead of 100 rand, and the case of 1,000 rand instead of 10,000 rand. So that will be the same principle that will have to be applied. So now the next under procedure number 4 says if the bank statement is incorrect or incomplete, an entry must be made in the bank reconciliation statement. So now take note of this once again. If the receipt or the payment, or if the payment or the receipt is incorrect, we make correction either in the receipt or the payment, which is either on the debit side of the bank account or on the credit side of the bank account, because this is the cash receipt journal, debit side, the cash payment journal, credit side. But if the incorrect one or the incomplete one is the bank statement, that must be corrected in the bank reconciliation statement. Maybe be mindful of that, very important to note. And again here they are telling us the same thing, that if the bank statement is incorrect, the correction must be made in the bank reconciliation statement, because that will mean that the receipt and the payment, being the debit side and the credit side of the bank account, are correct. But who is incorrect or who is wrong is the bank statement. Therefore, now the correction must be done in the bank reconciliation statement. Procedure number 5 says items in the bank statement debit column that has not been ticked off must now be entered in the cash payment journal. Meaning, if there are amounts that are on the debit side of the column or the debit column of the bank statement, remember the debit column is the cash payment journal. So now if there are amounts that have been not ticked off on the debit column of the bank statement, they must be recorded in the cash payment journal unless there is an adjustment stating otherwise. I want to specify that, because there might be an adjustment that states that the amount that appear on the debit side of the bank on the column in the bank statement was the mistake of the bank. So now if the amount that appear on the debit column of the bank statement was a mistake of the bank, it's an amount that was not supposed to be recorded there. Therefore now the correction might need to be made or will need to be made in the bank reconciliation statement, because not all amounts that are on the debit column of the bank statement are the amounts that were supposed to be in the cash payment journal. You'll see that later on when we do exercises that reach to that level. but I want to emphasize it also now. The number 6 says items in the bank statement credit column, which is the cash receipt journal. We know that the receipt side has not been ticked off, must now be entered in the cash receipt journal. Remember, if the amounts that are on this credit side were supposed to be on the credit side, and I want to go back to number 5. Number 5 said if items in the bank statement debit column that has not been ticked off must now be entered in the cash payment journal. Remember, if these amounts are the amounts that were supposed to be on the debit side, if they were not supposed to be recorded, therefore now they will have to be corrected in the bank reconciliation statement. But if they were supposed to be there and they are there, but they don't appear in the cash payment journal, therefore now they must be recorded in the cash payment journal. Hence, very important to start reading the adjustments before you do the comparison. Then after we go to number 7, number 7 says items on the bank statement by error. So now I think they are clarifying what I've been explaining between the two. Items on the bank statement by error must be entered in the bank reconciliation statement. So now that means if the amount appears either on the debit column of the bank statement or on the credit column of the bank statement by error, in this case, is there by mistake. So now that means this amount is not supposed to be corrected in the receipt, and this amount is not supposed to be corrected or recorded in the payment. It was by error that it was there. It must be corrected or entered in the bank reconciliation statement. That's exactly what I just explained under number 5 and under number 6. So now after that has been done, the last procedure to take into account is the comparison of the previous bank reconciliation statement, BRS, previous bank reconciliation statement with the current month's bank statement and clear the outstanding amounts. Here we compare what is in the previous BRS, then we compare that with the current bank statement. Then after, if some amounts appear both sides, we tick them off, we do nothing. But if some they don't appear, therefore now we take those items into consideration in the current bank reconciliation statement. This theory is very important to master. I will come back to it as I am explaining now the exercise that I'm about to begin with. So I have this exercise that I brought it before you, that I will be using it to give you the basics and the full introduction or the application of the bank reconciliation statement, while I'm still just clearing all my workings. Now we go to the exercise, which is the books or the book of Poole. A very simple and straightforward exercise that will give you the basics in terms of doing the bank reconciliation statement. Now it says the books of Poole. We are given the bank reconciliation statement at 30 November 2001. And the question is, why then are we given the bank reconciliation statement if we need to do the bank reconciliation statement? This is the previous bank reconciliation statement. This is for the previous month in this case. So now we go to, or we are given this previous BRS. There was opening balance, outstanding deposit. Then after we had outstanding checks, check number 68, 70, and we are given the figures. Remember, this amount is the total of the two figures. 36 Rand 15 cents plus 24.35. Let me just show you the calculations. 36 Rand 15 cents plus 24 Rand 35 cents. It gives us 60 Rand 50 cents. So this is just the sum of the debit side. And also please be mindful of the fact that a bank reconciliation statement, there is a column here, though it's not clearly stipulated. And there's normally a line that goes like this and also goes like this. Here is the debit side and here is the credit side. But sometimes some examiners, they don't show the line between the two, but there is a debit side and there is also a credit side. And again, this figure, you don't have to write it as negative, but this figure, it is in negative because on the debit side. So we say the total of the credit side opening balance plus the outstanding deposit minus the total of the debit side, and this gives us the balance per bank account. Then after, we have our cash receipt journal, just to emphasize everything, and it's at the end of December 2001. And if you look at the previous BRS, it's at 30 November 2001. So this is obviously the previous reconciliation period, which is the previous month in this case. Then after, we go to the cash payment journal, and our cash payment journal is at December in the year 2001, and we are given all the figures for the cash payment journal. And take note that in the receipt we have the total given to us, and also in the payment we are also given the total already. Then after, we have our bank statement, which we know that the credit side is the cash receipt journal and the debit side is the cash payment journal. And it is very important that you take note of this, so that you know which side must you compare with which side goes with the receipt and which side goes with the cash payment journal. Therefore, now we go to what we are required to do. We are then required to do the bank reconciliation statement at 31st of December 2001, and to complete the cash receipt journal and the cash payment journal plus bank account. I also want to add the bank account, though it's not given, but it's a very important account to do whenever you do the bank reconciliation statement. I will change the requirements because this is normally number 2 and this is normally number 1. Preferably do the receipt, do the payment, do the bank account, then after you do the bank reconciliation statement. So I will start with the receipt, payment, bank account, then after we do the bank reconciliation statement. So now let me start with my workings to answer, as I've given you the clarity in terms of the order of the question. So now I will start with the cash receipt journal. And we know that cash receipt journal has many columns, but in the bank reconciliation, we normally don't give all the columns. We focus on the bank account column. We start with the totals, and we take the totals of the receipt that are already given to us. And the total of the receipt that is already given to us is 585, which is the totals. Always take that total. That is your starting point. So now we have 585 rand. There were no cents, but it was 00. So we might leave 1, 2, or 3 lines. Then after, we start with the cash payment journal. Cash payment journal. Then after, we check also how much the totals before the adjustments were done. So now in the cash payment journal, we are given the total of 550 rand 75 cents. We have 550 rand 75 cents. That is our totals. Then after, we do our bank account. We do our bank account. And we know that our bank account will have a balance. It could be a debit balance, it could be a credit balance, but it depends to what we are given. So now, where do we take the balance of the bank account? The balance of the bank account comes from the previous BRS, which is the previous bank reconciliation statement. In the previous bank reconciliation statement, we had our balance per bank account. And this balance per bank account is recorded on the credit side of the bank reconciliation statement. And please be mindful that the bank reconciliation statement is recorded from the perspective of the bank statement. Remember, a bank statement is done by the bank that we bank with. So now, if they are showing a credit balance, it means they are indicating that they are owing us money, meaning it's an asset on our side. A credit of the bank statement is a debit of the bank account, because it's an indication that there is a liability that the bank is owing to us, and that liability is an asset on our side. So now this balance which is on the credit side is on the debit side of the bank account. So now the 290.30 will be on the debit side as 290 rand 30 cents. So now this will be a debit balance of the bank account. So now after we have recorded the opening balance of the bank account, then we start doing the comparison of the cash books. And when I'm saying cash books, I am referring to the receipt and the payment and the credit side of the bank statement and the debit side of the bank statement. So now I will start comparing my cash receipt journal with the credit side of the bank statement. Take note, I am comparing receipt with the credit side of the bank statement. So meaning I start to look at the receipt, then after I compare the amount with the credit side of the bank statement. So now in the cash receipt journal, we can see the first amount is 110, and we do have 110 on the credit side of the bank statement. So we can tick 110 and tick 110.50 both sides. And I said if the amount appear both sides, you do nothing. Then I look for the second amount. The second amount in the cash receipt journal is 186, and 186 also appears in the bank statement. Then after you take it both sides, don't take it if it doesn't appear to both sides. Then after in the cash receipt journal, I have 150 rands, and that 150 rands, let me check. Yes, it appears both sides. Therefore now I can tick that and take it appear both sides. Remember, I said to you once again, we are comparing the receipt with the bank statement. So now we can skip other figures on the credit side of the bank statement, but we go with the order of the cash receipt journal. We must mark all of them one by one. Whatever is left on the credit side of the bank statement, then we compare that to the previous BRS. Then after we move forward. Then on the cash receipt journal, there is 138.50. Let us look. Do we have 138.60? No. Was there any adjustment? There was no adjustment. So now if that is the case, that means this amount will go to the bank reconciliation statement. Any amount that will be in the receipt and it was supposed to be on the receipt and it's not on the credit side of the bank statement and it was supposed to be on the credit side, therefore that goes to the bank reconciliation statement on the credit side. On the credit side of the bank reconciliation statement. So now in the cash receipt journal, we are done. All the amounts have been taken into account. Then after we are not done with the credit side of the bank statement. Then after now we compare the question is, are there any other amounts that are not yet marked or ticked off? The answer is yes. Which of those figures is the 70 rand 20 cents that is not marked? 70 rand 20 cents, does it appear in the previous BRS? Let us check. Yes, there is 70 rand 20 cents on the credit side of the previous bank reconciliation statement. Do you see that? It's on the credit side. And we compare that credit side with the credit side of the current bank statement. So we tick that, and remember, if the figure appear both sides, you do nothing about it. Then after we say, okay, in the previous BRS, is there any other amount on the credit side? The answer is no. Remember, I said to you that the 60 rand 50 cents is the total of the debit side of all the outstanding checks. So it's not an amount that is on the credit side. So we don't have any other amount on the credit side of the previous bank reconciliation statement. So now, meaning we have compared the receipt with the credit side of the bank statement. We have compared the credit side of the previous bank reconciliation with the credit side of the bank statement. So now the question is again, Are there any other amounts that are still left on the credit side of the bank statement? The answer is yes. Which of those figures? It is the 60 rand. So now this will go to the cash receipt journal. Any amount that is left not marked after you have done all the comparison of the cash receipt journal and the credit side of the bank statement, and also the credit side of the bank statement with the previous bank statement credit side, all those amounts that are still left not marked off must go to the cash receipt journal unless there is an adjustment stating otherwise. And I want to say that because there might be adjustments that state otherwise that need to be taken into consideration. So now this can be recorded now immediately in the cash receipt journal as 60 rand. And let us check, what is the 60 rand for? 60 rand is for rent deposit. So now this will be rent income, money that was deposited by the client or by the tenant in our bank account in the form of rent. And if the tenant record or deposit money in the bank, we don't know if there is money in the bank until we print the bank statement. So now in this case, the client at the end of the month of December deposited an amount of rent of 60 rand, and we did not record that in the cash receipt journal. After we printed now the bank statement, we realized that, oh, there is an amount that was deposited by the client, and obviously when the client deposit, there will be a reference that we give to a client to say, if you deposit, please write your ID number as a reference. So now we look at the ID number and like, okay, this is one of our tenants. So now this is money that was supposed to be a receipt on our side, but it's only in the bank statement, but not in the cash receipt journal. So now we must record it in the cash receipt journal as money that is received, rent received. And this will be an amount of 60 rand. And there will be no other rent or there will be no other receipt item because we have captured all of those items. So 60 rand plus 585 will give us 645. So now we have completed the cash receipt journal. Therefore now we go to the cash payment journal. We go to the cash payment journal. Remember, the receipt again goes to the debit side of the bank account. Just to complete that, total receipts 645. This is the total 645 after we have done the adjustments or the reconciliation. Then now we go to the cash payment journal where we compare the cash payment journal with the debit side of the bank statement first. I prefer that approach. We say there is 70 rand and you can see 70 rand appears in the payment and also in the debit side of the bank statement. There is 42 rand 50 cents and it appears both sides. And remember, you only take if it appears both sides. 86 rand in the payment appears also on the debit side. There is 115 rand and it appears both sides. There is 115 in the payment. There is 115 also on the debit side of the bank statement. Then we have 62 rand 25 cents that appears both sides. And we have 32 rand, but we don't see 32 rand. So now the minute an amount appear in the cash payment journal or in the cash books, but not in the bank statement. Therefore, now that goes to the bank reconciliation statement. It will be on the debit side. Then after we have 140 rand, remember, if there is no adjustment that states otherwise, it goes straight to the bank statement. And we know that cash payment journal is the debit side of the bank statement. So that will go to the debit side of the bank reconciliation statement. And we also see that there is 140. And this 140 also does not appear on the debit side of the bank statement or debit column of the bank statement. So now this will go to the bank reconciliation statement. and it will be recorded on the debit side as outstanding check. So now we can see that we have taken into account all the amounts that are in the cash payment journal. Then after we go again to the debit side of the bank statement and we compare the debit side of the previous bank statement with the debit side of the previous bank reconciliation statement with the debit side of the bank statement. So now in the previous bank reconciliation statement, we had 36 rand 15 cents. Let us check if do we see this amount. Yes, it's there on the debit side. So now the 36 rand 15 cents appears both sides. Then we can mark it both sides. And remember, if it appears both sides, we do nothing about that. Then after we have in the previous BRS, 24 rand 35 cents. Does 24 rand 35 cents appear on the debit side? No, we don't see any 24 rand 35 cents. So now the minute an amount appears in the previous BRS but not in the current bank statement, that goes to the bank reconciliation statement. And which side was this amount coming from? It was coming from the debit side of the previous bank reconciliation statement. So now it must still be recorded on the debit side of the bank reconciliation statement for the current month. So now this 24 rand 35 cents will be under outstanding check, which is check number 70 for 24 rand 35 cents. Then after we have compared all the debit amounts in the previous bank reconciliation statement. Remember, this is the previous bank reconciliation statement. We have compared all those two figures. Then after now we say, okay, are there any other figures that are on the debit side of the bank statement that are not marked or ticked off? The answer is yes. Which of those amount? 15 rand, you can see the first one. What is 15 rand for insurance? Remember, the debit side of the bank statement is the cash payment journal items. So now this amount must go to the cash payment journal. This amount must go to the cash payment journal. This amount must go to the cash payment journal unless there are some adjustments or additional information that states otherwise. So now in this case, once again, it means the stop order of insurance is a client who paid insurance in our bank account. So in this case, it's an insurance that was paid that we paid through our bank account. Where in this case, we paid insurance where the insurance company deducted money in our bank account. So now when money is deducted in our bank account by the insurance company, we don't know even if we sign the agreement. Then now after the month end, we print the bank statement and we see that, okay, the insurance company did deduct an amount of 15 rand, but the 15 rand is not yet recorded in the cash payment journal. So now we start to record it and we say insurance expense. So now we record this as insurance expense. And this insurance will be an amount of 15 rand. We record this as insurance to the value of 15 rand. Then after we go to the next one. Now there is a check which was paid by there was a check deposit or cash deposit fee where money was deposited, and this was a fee for depositing money. And we know that a fee to deposit money, we call it bank charges. So now this will be under bank charges, and bank charges is money that we pay to the bank because of making use of the services of the bank. So now this will be called bank charges, and bank charges was 2 rand 50 cents. 2 rand 50 cents is an amount of bank charges. Then now the next one was a check which was unpaid, J. Olcas. So now in this case, we just write the name of the customer, J. Olcas. and we normally say RD, refer to drawer or unpaid check. In this case, the customer gave us a check, but when we did an investigation, we realized that there was no money available in the account of this customer. So now the check, in other words, bounced back because there was insufficient funds. And they will normally say sometimes check was stale or refer to drawer when we are given additional information. So now, as I said to you, that the debit side of the bank statement is the cash payment journal. So 550.75 plus 15 rand plus 2 rand 50 cents plus 20 rand will give us the total of the cash payment after the adjustment has been taken into account, 585.25 rands. So now we know that this will be total payments. And our total payments will be 588.25. So now from here we can balance our bank account. We have recorded all the adjustments, all the figures that we paid but were not recorded in the cash payment journal, but were only appearing in the bank statement. We have recorded those, and all the amount that were received but not recorded in the receipt, we have recorded them. Therefore now we can record the adjusted bank 645. The total will be 935.30. A total will be 935.30 minus 588.25, and this gives us 347.05, and this is our balance. Our balance carry down, and our balance carried down must always be the same as the balance brought down. Closing balance becomes an opening balance. Then we have our balance brought down. So now our bank reconciliation balance must exactly be the same as this figure. So now we go straight to our bank reconciliation statement. Now we do our bank reconciliation statement. Our bank reconciliation statement. And our bank reconciliation statement, as I said to you, that there is a debit side and there is also a credit side. There is a debit side and there is also the credit side. And after we have recorded the debit side and the credit side, preferably draw the lines there in between. Then after we start with the opening balance. Now in the bank reconciliation statement, the balance that we start with is the balance at the end of your bank statement. The balance at the end of your bank statement at all times, balance at the end of your bank statement. Remember, just to go back, we had a balance of the bank account. The balance of the bank account, which was this amount. The balance of the bank account came from the previous bank reconciliation statement. Where was the previous bank reconciliation statement? It was provided to us. The previous bank reconciliation statement was this figure here at the bottom, that 290.35, that figure. The closing balance of the previous bank reconciliation statement became the opening balance of the bank account. But the closing balance of the bank statement, which is 404.90, this figure is the one that becomes the opening balance of the bank reconciliation statement. This is the bank statement. The closing balance becomes the opening balance of the bank reconciliation statement. And if you look in the beginning, there was an opening balance and this opening balance is 280.60. This opening balance of 280.60 is the same as the opening balance of the previous bank reconciliation statement. It's just something to be mindful of. This was the previous opening balance, and it was the opening balance. It did not change, became the opening balance. But we don't take that opening balance as the previous BRS, but we take the closing balance. But be mindful of this one. The opening balance is credit, and there was no change throughout going down, meaning the closing balance is still a credit balance unless it was stated otherwise. In this case, the opening balance of 404.90 will be a balance which is the credit balance per bank statement. So now we normally say credit balance per bank statement. Credit balance per bank statement. I just want to make sure that I squeeze everything. Sorry for the bad writing. Credit balance per, and that is the credit side. As I said, that is 404.90 cents. Then after we have outstanding deposit. Remember, outstanding deposit are the amounts that were in the cash receipt journal, but not in the bank statement. So now I'm looking for the cash receipt journal, and if is there any figure there where I said BRS, I take that figure. I go to my cash receipt journal because I'm looking for the outstanding deposit, and then I do have my outstanding deposit. Remember, there was that 138 rand 50 cents. That 138 rand 50 cents that needed to be recorded in the bank reconciliation statement. On which side? On the credit side, because I was comparing receipt with the credit side of the bank statement. So this outstanding deposit was supposed to be recorded on the credit side of the bank statement. Therefore, now it must be recorded on the credit side of the bank reconciliation statement. This is 138 rand 50 cents. So now this was the only outstanding deposit that was taken into account. So 138 rand 50 cents plus 404 rand 90 cents. It gives me the total of 543 rand 40 cents. So now this is a total of my credit side. Then after I go to the outstanding checks. Outstanding checks. Outstanding checks. Outstanding checks is check number. Therefore, now I'm looking for the payment journal, and all the figures that were there will be recorded on the debit side. And the first outstanding check will be, let us not forget the previous BRS, because in the previous BRS there was 24 rand 34 cents that did not appear on the debit side of the bank statement, if you remember that. In the previous bank reconciliation statement, just to erase that so that we see very clearly. In the previous bank reconciliation statement, we had an amount of 24 rand 35 cents that did not appear on the debit side of the bank statement. So now we said this figure must be recorded in the bank reconciliation statement on the debit side, because it was on the debit side of the previous bank reconciliation statement. So now it will be check number 70 for 24 rand 35 cents. The next check, it will be check number in the cash payment, check number 76. Check number 76 must be recorded. Check number 76 for an amount of 32 rand. For an amount of 32 rand. This check was also outstanding. It was in the payment but not in the bank statement. And remember, we said if the bank statement is incorrect, we correct it in the bank reconciliation statement. And check number 77 for 140. I already said the BRS, 440 rands. So now the total for this one, the total for this debit side, as I said that you must not write it in brackets, 24.35 plus 32 plus 140 gives me the total of 196.35. So we will get to the balance. Then we say minus 543.40. So now this gives me 347.05. Remember, I was supposed to have said 543.40 minus 196.35. This gives me a balance per bank account, which is debit balance per bank account. Debit balance per bank account. Debit balance per bank account. So now this debit balance must be exactly the same as that which appeared in the bank account. Let us go and check. And I want to let you be mindful of the wording. It is very important that in the beginning you say, if it's a credit balance per bank statement. Why? Because this figure was taken from the bank statement. We took the balance of the bank statement at the end, the 404 here at the bottom. So it's per bank statement. But the closing balance should be equal to the bank account. So that's why here we say debit balance per bank account, because the bank account had a closing debit balance. There it was balance brought down 347.05. So now that's why we change the language here. We start by saying debit balance per bank account, not per bank statement here. Only the opening balance, that is per bank statement. So now this is how your bank reconciliation statement at 31st of December 2001. This is how this should be looking like. All the deposits that are outstanding, they go to the credit side because you are comparing the receipt and the credit side. And all the cash payment journal items, which were the outstanding checks, they go on the debit side. Then the difference should be equal to your bank. And with all those words, guys, I think I have clarified you. I just want to recap to what I said to you in terms of theory. And everything that I said is exactly as I explained to you in the theory or in the procedure. Which step to follow, what must you do, what must you not do. So now everything is from the theory, and I applied it again in practical. Then after now I came to the bank reconciliation statement that reconciles the bank. With all those words, guys, let me say shalom.